Hello traders, this is Blake Morrow with ForexAnalytix, and you are listening to the week ahead video for August 18th, 2019. Hope everybody's having a great Sunday and a great weekend. I want to get started. We got a lot to talk about this next week, but before I do, I got to mention if you haven't tried out ForexAnalytix, make sure you do so. It's only $1 for 10 days. $1. $1. Sign up, click right here, sign up. And when you enroll, make sure you download the mobile app so this way you have all of our analysis and notifications right at your fingertips whenever you're not in front of your computer. Most of us use the desktop application because we have multiple monitors, we're trading. But when we step away, it's nice to know when a currency level hits a support or resistance level, or you get a new update in analysis, and you can read it when you're on the fly. So yeah, make sure you try us out. Now let's talk about this next week. This next week's going to be a pretty busy week, especially towards the end of the week because we have the Jackson Hole Symposium. Now, don't forget, we are in August. It's the last couple weeks of summer. There's so many people and traders away from their desks. A lot of backup secondary traders that are manning the positions. So the liquidity is not going to be there, but that doesn't mean that we won't get volatility, especially with Jackson Hole and especially with some of the data that's coming out this week. Now, before I go through all of that, I do want to say that I think ahead of Jackson Hole, we might continue to see a bit of a rally in equities. And if you look at the S&P, we are consolidating. Let's take a look in the S&P 500, and you can see we had a nice bounce on Thursday, Friday. I think there's scope for the S&P to bounce. We held the 200-day. We could bounce up towards the 50-day moving average up here around 2950. So we could have a 20, 30, 40 handle rally in the S&P. I don't think that is or would be uncalled for. There was some positive news over the weekend regarding the U.S. allowing Huawei to extend their licensing for another 90 days, and that could relieve a little bit of tensions between the U.S. and China, and we could see, like I said, a little bounce in risk. But I would expect that sellers do start to pop up as we approach the 2930 to 2950 range in the S&P. Now, what would that mean to the rest of or some other asset classes? Like, let's take a look at gold. I think that gold, and if you look at the weekly chart in gold, we've rallied to the 1535 level, which, if you don't recall, that those are the lows from 2010, 2011, and we spiked right up to them and reversed. Well, I think that gold has the potential to pull back towards 1480, 1470, towards this channel support before we see buyers again. And remember, if stocks continue to bounce, gold could pull back a little bit, but I think you're going to find buyers on dips, because if you look at gold, let me pull up the gold chart really quick so I can just show you really fast with that silver. Here's the weekly chart in gold, okay, and like I said, this is the 2000. Oh, I'm sorry, it was 2011, 2012. I think I said 2010, 2011, but 2011, 2012 lows. If you notice, this is a 6-year consolidation, whether you look at it as an inverted head and shoulder pattern or just a 6-year consolidation. There is scope for further moves higher, and I do believe going into the end of the year we are going to be trading towards 1700 in gold. That doesn't mean that we're going to go up there this week. This week, you look at the daily chart, yeah, we're overbought. We're divergent on relative strength. We hit a lot of resistance. So I think that we could pull back to 1480 pretty easily in the gold market, right? What else could pull back? Well, I just had the chart up there, but I'll show you like the 10-year, okay? You have the 10-year. We've had just a massive rally in fixed income, and we're near a 78% retracement in the 10-year. If you look at the boons, boons have rallied significantly. We're up against channel resistance here, and it looks like we could pull back a little frothy in some of this fixed income, excuse me. So again, if the S&P continues to rally, we might see a little bit of pullback in gold. We might see a little bit of pullback in bonds. But I want to look at a longer term chart in the bond market that we don't have drawn out in ForexAnalytix because I have to go way back. All right, this is the 10-year. And I know you look at this chart and you go, wow, that's pretty overbought, 261% extension of this, the previous triangle here, and 78% retracement long term. But look at the weekly chart here in the 10-year. There is scope for further rallies, and I would not be surprised by the end of the end of the year that the 10-year isn't trading up towards these all-time highs, and that would put 10-year yields down at what, 1.35 maybe, 1.3, I don't know, somewhere in that neighborhood. So I think there is a further scope for the bond markets to rally. I don't know if they're going to do it, this week. Since we're talking about the week ahead, I think there's scope for a little bit of a pullback here. If equities recover, gold might bounce, or gold might pull back. Same with bonds. All right, now you're probably thinking, well, how does that affect the currency market, and what do we do with currencies? Well, I'm glad you asked. Let's talk about the euro dollar, and I want to talk about the euro because we do have European data towards the end of the week. We have all these PMIs coming in Thursday morning. A lot of people are very bearish the euro, and a lot of people are looking at the euro thinking, oh, we could very easily see 105 again. And I'm not going to argue that point. You look at the Eurozone economic data, you think about Italy, the risks are there to move lower. But the one thing that you have to keep in mind is the euro is also a funding currency, a carry trade funding currency. No one wants to hold euros with the ECB at zero, kind of like the yen as well. No one wants to hold yen. You deploy it into other assets into different places. Well, in the euro dollar, if we have a reverse in equities, you think about the S&P. Oh yeah, we can rally another, 30, 50 handles in the S&P. Great. Well, we're also heading into the time of the year in September, October, where stocks tend to be a little weaker seasonally. September, October, maybe even November, right? And with the current environment, with the trade wars, with Brexit, with Italy, Brexit coming up, October 31st is coming up a lot quicker than than you realize. If we get a little bit of risk aversion, is there a chance for the euro to rally? I think it would be unexpected. I think most people are expecting the euro to move lower. But I'll tell you, if the euro rallies above 113, we are in a descending wedge. That's not the chart I was looking for. That's the chart I was looking for. We're in a descending wedge on a weekly basis. We break above 113, we could very easily trade to 115, 116 again. And I think the market would not be expecting that type of move. But if we see a move lower in risk appetite, that means stocks start to move lower. We could see a reversal in the euro. We could see the euro catch a bid. So just keep that in mind. When you look at a descending wedge, chances are it's going to break, it's going to reverse at some point. There's a higher chance or higher probability of it reversing higher than lower. That's not saying that it can't break lower. I've seen descending wedges break lower on many occasions, but I would say there's a 30-35% chance of it moving lower and a 60-65% chance of it breaking higher. When does it do it? Well, just follow the wedge lines. Again, above 113, it's pretty bullish, and below 110, and things might get a little bearish. So I think the euro is worth noting, especially with the PMIs coming up on Thursday. Now, you talk about the cable. The cable did catch a little bit of a bid there at the end of the week, and I think that's more positioning than anything. 120 level is a huge level of support for the cable, but I think there's going to be sellers emerging on any substantial rally in the cable, like move up to 123. You're going to find sellers up there, unless we know for a fact that Boris Johnson is not going to walk the UK off the ledge on October 31st. Unless we know that for sure, expect sellers on bounces. Any type of bounce, the cable is going to be capped, in my opinion, for now. One thing that scares me about like the Aussie, you look at the Aussie and some of these commodity currencies and emerging market currencies, which I'll go over the peso here in a second, is the fact that we're just not rallying. I mean, look where stocks are at and look where the Aussie's at. The Aussie cannot rally. And if it doesn't go up, the chances are increasing that it's only going to go down because you got buyers that are like, okay, China and the US, something's going to happen before the election season. China's going to buckle, US is, Donald Trump's going to buckle, things are going to improve, we're past the worst of it, whatever your argument is. Well, you know what? The Aussie has been very unresponsive. It has been extremely heavy. And, if you take, the RBA and the RBNZ and, other central banks that might be going eventually to zero, because it seems like we're all racing to zero now. And we'll find out more with the FOMC on Wednesday when we get the FOMC meeting minutes. I'll talk more about that later. The Aussie is just trading heavy. So, if the Aussie continues to stay heavy and we stay below, I've been looking at the 68.50, level. As long as we stay below that, there's no reason to be long Australian dollars right now. And Kiwi is a very similar situation. But I really wanted to talk about like the peso. All right, the peso is going to be really, really important to us moving forward. So as you guys know, or maybe you don't, if this is your first time listening and you haven't been listening to me for months and months on end, then this might be the first time you've seen this chart. This is a weekly chart of the US dollar Mexican peso. Let me grab a drink of my coffee. Excuse me 1 second. The dollar mex is an important currency because it moves up when there's risk aversion. It moves down when there's risk appetite, meaning that if people are selling equities aggressively, they tend to sell these emerging market currencies that have been used to fund carry trades in the currency market. You got Banxico just lowered the rates from 8.25 to 8, but they're probably going to be moving rates lower moving forward. And if stocks continue to weaken or they start to weaken and we should see the dollar Mexican peso rise in value. A break above 20.20 would signal to me that things in the equity markets are going to deteriorate probably rapidly. The opposite of that is if the dollar Mexican peso breaks 19. If we break 19, that probably signals to us that maybe the trade war, we've come to a trade truce between the US and China, and stocks are going to rally significantly. Well, the dollar Mexican peso breaks below 19. But I think you need to keep a real close eye on the dollar Mexican peso because Banxico is cutting rates. I think stocks are at risk this fall and moving lower. So the dollar Mexican peso is obviously at risk of breaking higher. But keep an eye on it. Doesn't necessarily mean you need to trade it right now. Oh, I guess I should also mention real quick with the dollar Mexican peso. We're above the 200-day moving average. See that little blue line right there? That's that comes in at 1937. I think buying dips to the 200-day moving average, that makes sense. All right. The dollar yen is also a really important currency pair to watch, and we have not hit 2019 lows. We're holding above that January 2nd spike low at 104.65. But I'll tell you, I think the dollar yen is in a 107 to 105.50 range. Okay, we break above 107. That's going to be bullish. I think you're going to see a little bit of a squeeze. That would happen if equities rallied. You'd see a sell-off in yen. You'd see the dollar yen rally. But if things deteriorate and stocks start to move lower, then the dollar yen should get weaker. And a break below 105.50 would tell me that probably 104.65 is coming into view. And a move below, where's my weekly chart? A move below 104.50 would be extremely bearish in the dollar yen, bullish yen, which would mean bearish equities. So the dollar yen still looks vulnerable. I'm surprised that it hasn't rallied more with stocks as strong as they are, or as they're holding up as well as they are. Let's just put it that way. All right, there are other things that I'm looking at too, but I don't want to extend this video too much further out because I have to talk about this next week, this upcoming week. Now, what was I going to say? If you want, my analysis throughout the course of the week, we have a free webinar every morning at 7. No, it's not at 7. It's at 8 a.m. Eastern. It's the face webinar, and I'm there every morning, and I'll be there every morning this week. So I'll keep you updated on other pairs that I'm looking at. But let's talk about this. Let's talk about the week ahead. So if you're on ForexAnalytix, you can look at the calendar and you can look at the entire week of all the data that's coming up. Okay, I'm going to just reference my notes really quick, but I just want you to see where you can see all this data. So Monday night, or it would be Tuesday morning in Australia, we have the monetary policy meeting minutes. So if you have any Aussie exposure, keep that in mind. That would be, yeah, Tuesday morning in Australia. On Wednesday morning, we have Canadian CPI. So if you're trading the Canadian, just keep that in mind. We also have the FOMC meeting minutes on Wednesday afternoon. All right, and we're going to get a peek behind the curtain a little bit on how the rest of the FOMC members feel about where rates are going, and that's going to be a pretty important meeting minutes since the Fed. We're going to find out if the Fed's more one and done or if they're going to continue to lower rates and what the trajectory might be into the end of the year, which most of us believe that the Fed's going to continue to lower rates, but we're going to see maybe how aggressive or how dovish they are, or maybe they're not that dovish with the minutes on Wednesday. On Thursday is going to be an important day because we have German manufacturing and services PMI, but we also have French manufacturing PMI and services PMI, the Eurozone just in general, really, right? So I'm not sure if I'm in the camp that weaker German data is going to continue to weaken the euro. Keep in mind that the ECB has the rates at 0. The BOJ has had their rates at 0 forever. All right. No one looks at Japanese economic data. I mean, you look at it, but it doesn't move the market. That's because the yen is a risk on, risk off, carry trade funding currency. Well, considering the fact that the ECB has been at 0 forever, it is also a funding currency. So I'm wondering if at some point the economic data is going to, you're not going to get much of a response from it. So it'll be interesting to see how the euro responds on Thursday morning with all of these these PMIs coming out, and especially with the German data has just continued to erode, especially over the last few months. Thursday evening, we have New Zealand retail sales. Obviously, it's Friday morning if you're in New Zealand. And then most importantly is we have the Jackson Hole Symposium starts on Thursday night. We're going to start getting some comments, but it's Friday and Saturday. And Fed Chairman Powell is speaking Friday morning at, I think, 10 a.m. And we have Canadian retail sales too, by the way. But we're going to be listening to the Fed chair on Friday morning at 10 a.m. Eastern, and that's going to be a pretty important mover, in my opinion. So, guys and gals, if you found this video beneficial to you and helpful for this next week, and you're listening to us on YouTube, give us a thumbs up. It makes me feel better about doing this every week. It makes the team that works behind the scenes uploading the video and doing the editing makes us all feel better about doing these. So yeah, give us a thumbs up if you like it, and then also click the bell icon, so this way you get notified on your mobile devices. If you have the YouTube app, you get notified on your desktop when we upload a new video or interview from our Face webinars. And guys, I hope you enjoy the remainder of your Sunday, and I will see you tomorrow morning. I'll be on the Face webinar tomorrow morning, so I'll see you there, and I'll be covering all the majors as well as I normally do. So have a great one. I'll talk to you soon. My name is Blake Morrow with ForexAnalytix. Thanks for listening in.